Hi, I'm Justin Zacks, Vice President of Strategy at Moomoo Technologies. Welcome to our last webinar of the day. If you missed our first webinar, how does a professional fund manager build a portfolio, or the second one, earnings season analysis and the truth about growth and value stocks with our partner Franklin Templeton, a replay in the app will be available shortly. This is the second day of our 3-day virtual event entitled Navigate Market Volatility with a Resilient Portfolio. There's a lot of uncertainty out there right now, and we've put together a diverse program to help steer you in the right direction. Each day, we're going to be airing 3 different webinars, each 40 minutes long with a 10-minute break in between. Saturday's webinars are going to start at 10 a.m. Eastern, and Thursdays are already available for replay in the live section of the Moomoo app. This event is going to give viewers an exclusive opportunity to learn about a variety of topics, including zero DTE, ETFs, portfolio building, earnings season, U.S. elections, and how to use the Moomoo app, along with many other topics. Our third webinar of the day, insights on how Moomoo users are trading options with guest Vince Cicco, Director of Derivative Sales for U.S. members at Cboe Global Markets. We've done a number of these educational webinars with Cboe about options, so please check them out on Moomoo's YouTube page or in the Moomoo app in that live section. Today, I'm going to be reviewing Moomoo's third quarter user options survey, where we sought to find out who's trading options, how investors are using them, and the resources and tools they're using to do so. Cboe provided its own proprietary data to support the survey, and I'm going to be asking Vince about some of the unique insights from the Cboe data on options trading in the overall market. A copy of the survey can be found in the newsroom on Moomoo's website for those that want to take a look at it, as either follow along now or look at it later once we're done. Towards the end of the webinar, we'll answer your questions about the survey and general landscape of the options market. So please make sure to submit them in the chat. Make sure to watch the entire webinar. We'll try to get to as many questions as possible. If you enjoyed the webinar, please check out the live section of the app under the Discover Moo tab to sign up and set a reminder for our more informative upcoming webinars. So let's get started right away. Welcome, Vince. Before we get started with the actual slides here, why don't you tell us a little bit about yourself and what you do at Cboe?
Yeah, so I actually joined Cboe. Well, my background, I traded options on and off floor for about 10 years. Then went to a startup technology firm that got acquired by Cboe a few years back. Worked on that non-transactional side, selling. You may be familiar with LiveVol or Trade Alert, some of the outside platforms that we had acquired. So I did that for a few years, and then I saw a big trend towards retail. So I decided a few years ago I wanted to jump more to the sales and coverage side with our big retail broker partners, and just covering retail as a whole, just given how much traction we've seen in the retail options community over the last few years. So yeah, I've been doing this for about 3 years now, and so to talk to you guys today.
All right, great, glad to have you here. Well, let's get started with the survey here. Again, this was done between Moomoo and Cboe in surveying our users during the third quarter. And just for the introduction here, I want to let everyone know that the interest in options trading at the retail level really has continued to expand, and a lot of that has to do with decreasing fees and spreads. That means the bid ask, the idea of you need to sell a stock on the bid and the market maker will buy it, and vice versa. Better access to financial information, and certainly something we offer here at Moomoo, the ability to get all the news in one place that might not have been available several years ago, and the powerful analytical and educational tools that are available. Again, a lot of these on the Moomoo app, all of our drawing tools, all of things like these webinars that you can watch live and replay on the live section of our app, or some of the drivers for this expansion. And Moomoo surveys its users to find out which ones are using options and the resources and tools they are using to do so. Cboe provided the proprietary data for that survey that supports many of the unique insights. And really the objective of this survey was to understand investor sentiment around those options. And to that effect, Moomoo asked three questions. Who is trading these options? This is something we really were interested in knowing. And what we found was a lot of them are new to options trading, but they do have prior experience in trading stocks and are often more financially well off than people are only trading stocks. And then we wanted to know what do these options traders want the most? And they're really hungry for new products and trading tools, educational sources, as well as informational sources that fit a variety of reasons for them trading in the different strategies that they're actually doing as well. And then lastly, we were very interested in how comfortable our users are with options trading, particularly the new ones. And, there's a strong interest in all of the educational resources for options trading to basically to make investors more confident. And this is one of the things that we've partnered with Cboe on is really helping average investors understand what options tradings are. That's from the strategies to the products, and we've done a webinar, monthly webinar series with Cboe this entire year, and it's really been really informative for a lot of our users. And I really would tell people go check it out on YouTube or on our website, and you can really see particular topics. So whether you want to know about zero DTE or you want to know about beginner beginner option strategies like covered calls or some more advanced ones. We did a topic on that recently as well. There's about 7 of them, I think, that we've done more recently that really can tie that all together. And so we asked, firstly, I want to get into that first question: who is trading those options? And what we found is options traders are more experienced and they're often better capitalized traders. They often start trading stocks first, and then they move on to options. And a lot of them actually have stops in between sometimes. More stock trading experience overall, and we found that 54% of our options traders have been trading stocks more than 3 years, compared to only 29% of non-options traders. And what was really interesting was there was a good mix. I mean, we did see, around half of the traders are trading options, and they're better funded overall. And this does make sense. Options trading can only be a part of your trading portfolio a lot of times, so you need to have that extra money. And 50% of the options traders actually contributed more than $5,000 to their trading investments on an annual basis, compared to only 28% of non-options traders. And it goes to show you that options traders do need to be a little bit better funded than the stock traders in terms of at least having several $1,000s there. We also saw they have higher household income. On average, 54% have annual household incomes over $70,000 a year, compared to only 42% of those non-options traders. And here we can see some of the charts, and I'm really interested in this. How long have you been trading stocks? And we do see that 17% are actually trading more than 7 years, which is a significant number that we're seeing here. Some seriously experienced options traders in terms of stock traders and how long they've been doing that. So moving on to this next slide, even though a lot of them are experienced in stock trading, we still find that options trading is still quite new in the journey. And only 67% have been trading options less than 3 years. Here we can see the knowledge level, again, is not expert. Only 5% have expert knowledge, and they do realize that options trading takes a while to get yourself educated on, and you might not learn it in a year to go from beginner to expert. It takes a while, and you can see a lot of people fall in that beginner and somewhat knowledgeable category, and that's why we are here. That's why Cboe is here to help all of our users gain that knowledge, to take you from that beginner level through knowledgeable, through very knowledgeable, and ultimately we're hoping you get to that expert level at some point. And among the options traders with 7 years experience or more, we do see 23% identifying their educational level as expert. And it just goes to show you that you can get there. It does take a while, and this is not, options is likely, you're not going to learn this in 2 months or 3 months and be an expert. It takes a while, and we want to make that point that you continually got to watch these webinars, do your education, use the paper trading, do all the things you need to do to get to that expert level. And although many are new to options, a lot of investors are choosing options over stocks. Not all of them, but 37% of survey respondents primarily trade options compared to 63% in stocks. And this is despite a lower overall allocation of funds. 46% of options traders allocate less than 10% of their investing capital towards options trading. And maybe I'll get to Vince here and kind of ask him now, what are some of the reasons for the increase in options trading among retail investors?
Yeah, I mean, I think you covered a lot of them when you started out. I mean, I think, first and foremost, there's better platforms out there, better tools. You think about what this industry looked like 10 years ago and what the trading tools that a retail user would have had. Obviously both the mobile access is better now. The online platforms are much closer to what professionals are using. And then obviously lower fees. In 2019, a lot of the, previously there were ticket charges. That's typically not something you'll find anymore. So, the cost to trade lower amounts of contracts has gone down. Obviously, some brokers charge commissions, but they don't charge the ticket charge that would apply. At the time, it would apply whether you did a 1 lot or a 10 lot. So it was obviously disadvantageous on a per contract basis for lower contract sizes. So I'd say, some mix of those, better tools, better education by the retail platforms and by the retail brokers and other industry groups, and then obviously lower fees as well.
All right, great. And is there a general overall trend towards smaller order size? And if so, why would that be?
Yeah, I mean, I think there's a couple reasons for that. One of them gets to the ticket charge comment I made earlier. Obviously, when you had to pay a ticket charge, regardless of trade size, it would cost you more on a 1 lot than you're paying the same ticket charge whether you're doing 1 lot or a 10 lot. Obviously, it gets more expensive on a per contract basis the smaller you go. So that was one of the reasons. That's one of the reasons. And people, with more expirations, there's more things to trade. Maybe people trade smaller more often, things like that. And then there's, algos as well that we see increasingly with some advanced retail. So, but I think that trend really trade sizes went down pretty substantially. They've kind of stabilized out a little bit, but certainly we still see smaller trade sizes than we saw years ago by a long shot.
Very, very interesting trend. And then, moving on to this next slide, this is some of the Cboe data. Here we see overall options volume has seen significant growth here since the pandemic. And part of that, I want to ask you, Vince, is what percentage of that options activity is retail, and how has that changed?
Yeah, I mean, that's when we get that question quite often, and it's really difficult for us. We can't define with precision exactly what percentage is retail. As an exchange, we don't have individual account info. We might know something's coming from Moomoo or Fidelity or TD or other brokers. We don't necessarily know of that volume. What is retail? What is pro-tail? Like a more professional type or institutional. So what we can say, there are like order disclosure reports and things online where we can get a generally gauge. And we do see, probably about half of overall volume is coming from those retail platforms. So, I mean, I think it's a fair estimate, but we certainly can't go down to a deep level precision, but it appears to be, close to half of all volume would be, considered retail or in that general range.
Yeah, and a lot of that is coming from the growth in index options, right? Can you walk us through a little bit about what index options are and what some of their advantages are?
Yeah. So, for people that aren't familiar, some of the index options that Cboe offers, SPX is index options on the S&P 500, the XSP, which is the 1/10th version of that. So it's the equivalent, about the same size as SPY options. VIX, so those are three of the names that you might have heard of before. Generally speaking, some of the things that have been popular with retail, when we start talking index options are cash settled. So you don't, because it's based on an index and it's not settling into shares. When your call expires, your put expires, you're not taking possession or delivering stock. It just settles in cash. So if you have that one lot in a single stock like Meta or Tesla or something like that, if you're long a call that finishes in the money, you're taking possession of 100 shares of that stock. That's not the case with an index. With an index, it settles to cash. So that's been something that's been fairly popular with retail traders. Also, they're European style. And European style just means that there is no early exercise. And the flip side of that is there's no early assignment. So if you're short an option, you're not going to get assigned, and get your position taken away. So those I think are two of the major, most popular benefits for index options. There's also some differences in tax treatment. Index options, typically, not all, but typically index options are subject to 1256 of the tax code. And that's 60/40 tax treatment. So it's 60% long-term capital gains, 40% short-term, and that's regardless of your holding period. So that would compare to, if you're doing options on single stock or ETF, they're going to be based on your holding period. Most of the time, options holding periods are under a year. So in that case, you'd be subject in those, in gains in those, to 100% short-term. So it's 60/40 long-term, short-term on the index side versus based on holding period on the ETF and single stock side. So again, that's been a popular benefit or feature of index options.
Thanks. I mean, that was very informative. I think a lot of our users are interested in index options and how the differences and some of those benefits. Just moving on here to the next slide. One of the other things, the insights that we drew from the survey, we found that options investors are active, and about almost half of our investors are trading on either a daily or a weekly basis, and 41% are holding their position from between 1 and 5 days, and 43% of options investors are trading 0 days to expiration options. Those are options that expire that particular day. Can you tell us a little bit more, Vince, about the trend towards short-dated options trading?
Yeah, it's been going on for a while now. It's not, for several years actually. It really picked up though in 2022. Both SPX and SPY. Tuesday and Thursday expirations were added. Previous to that, it was just Monday, Wednesday, Friday for a few years. So now there are daily expirations in those symbols. And there's a few more, XSP, like I mentioned, QQQ. There's a handful of symbols that do have daily expirations. But yeah, so it did take off in 2022. And, it's typically on the broad-based ETFs and indices on things that trade very liquidly. So I think it's something we haven't seen subside. I mean, it's been a pretty consistent source of volume for the industry over the past few years.
Yeah, and as everyone can see here on this slide, again, some great data here from Cboe showing, that these options that expire within 1 week, starting in 2022, have actually outpaced the volume of the greater than 1 week expirations, where back in 2018, this was certainly, in 2019 was certainly not the case. The second question we asked our survey participants is, what do options traders want the most? And what we found is it really varies based on their purpose and the strategy of why they use options. And so we kind of asked them, why are you trading options? And we gave them a number of different categories to choose from. And we really saw a few things that really stuck out. And the number one thing was income generation. That was the number one reason. And then we saw speculation also played a large role. And then on the other side, hedging and risk management was also very important to a lot of it. And we also broke this down by age. And what we found that each age bracket has different top reasons for trading these options. Some of the people in the 26 to 34-year-old bucket, it was for diversification and tax efficiency. Well, someone that was 65 and older was doing this more for speculation and precision trading around a specific time frame. What we did find was single leg option strategies are more popular than trading spreads, with the buy call strategy being the most popular. That was actually used by 74% of options traders. And here you can see on this next slide, the options strategies that they're currently using. And here we can see buy calls and buying puts are the top two most popular, among them, and they're more popular than the spreads. And so, the spreads or what is known as complex order types, are two different types of things. And maybe Vince, you could walk us through a possible complex order type and the trends you're seeing between simple and complex order types.
Yeah, so I think when we talk complex order types, we're talking, a good example would be a credit spread or a debit spread. So let's say you do a credit spread, right? So if you sell a 50 call and you buy a 55 call, so that's a $5 call spread. If you sell it for $2, your max risk there is $3, obviously times the multiplier and how many contracts you trade. So that would be an example of a credit spread. So a complex trade could just be, those two-leg trade like that, like a vertical spread. Those are common. Now, where we do see some distinctions, and I would agree with the results of the survey here, I think single leg is, it's the easiest thing to dabble into, I guess, when you start trading. But the interesting thing about complex is it limits your risk in a way. If you're doing a debit spread or a credit spread, you're capping your risk, and sometimes you're capping your return. But there's some trade-off there. We do see some difference though between SPX, specifically, index options and ETF and single stock. We do see pretty even split in SPX between simple and complex orders, simple being the single legs. Now, that is not what we see on single stock and ETF is much more in line, I think, with the results that you see up here, where people are buying, there's more outright purchases of calls or puts. The SPX, I think, is a little bit of an anomaly from that standpoint, because we see a really almost nearly even split between single leg and complex, and it's certainly not the case on some of the single stocks.
All right, thanks for those great insights. And then in terms of the informational sources and tools, again, it's a wide variety that they're using, and we do see charts being, by far the number one most important thing. Obviously, for active traders, technical analysis is very important, but fundamental analysis is also very important. Here we see that's the second most used source, the fundamental analysis, the tools and the screeners, and Moomoo offers, so many of these different types of screeners to help you with, understanding that valuation, the aspect of stock investing. 74% of options traders use technical analysis when trading, and obviously that aligns with the popularity of actual charting. And here again, we have another one of Cboe's charts. And what we've seen is an increase in the number of expiration leads to increased daily volume. And Vince, what I'd like to ask you here is, how has the increase in the number of expirations led to an increase in daily volume?
Certainly, when the new expirations came out in 2022, we have seen a volume increase since in ETF and index options. I would say, generally speaking, I think the options industry is on pace for a 5th or 6th straight record year of average daily volumes, and that actually runs the gamut between single stock, ETFs, and index options. I think this year index options are up about 12% year over year. They were up about 30% last year. The single stock and ETF also have nice growth, not quite as high, but we have seen increases in daily volume, and certainly, number of expirations leading to increase in daily volume. As I think we've seen on or discussed through some of the slides, there has been a trend toward shorter duration. So obviously that's manifested itself in some increases in volume as well.
And how has the mix changed between the single stock, ETF, and index options?
Yeah, index is a larger percentage of overall volume now than it was a few years ago, just based on the growth it's had. Like I said, last year it grew, I think index options were up, this is coming through OCC. I think index options were up between 30 and 40% last year, up about 12% through September this year. The other, single stock and ETF also had growth, usually 5 to 10% range. So the share of index is higher than it used to be, but as a general overall, single stock is still the largest amount of volume, single stock and ETF, obviously, just because they're coming from a higher base. But the growth of index, obviously, it's catching up, and that's due in part to some of the benefits we just discussed before with the cash settlement and European style and tax treatment.
And here we also found that options investors are really interested in new products, and we kind of surveyed them to see which ones they might like to see next. And by far, daily single stock expiration dates was the most wanted, with 54% wanting to see that, while only 14% wanted to see hourly expirations on major indexes and ETFs. So they want more expirations, but maybe not every single hour. And maybe Vince, I'm curious, kind of what your general view is. What's next for frequency in daily single stocks and hourly expirations? What do you see the mood is?
Yeah, I mean, obviously, you see the results of the survey. There is demand for daily single stocks in some instances. I would note you want to meet demand at the same time. You want to proceed smartly and not introducing risk, right? So, I mean, obviously, with single stock, you have questions around settlements and and moves after the close and things like that, right? So I think it's something the industry is cognizant of, that there is demand, as you see in the survey. And I think, if that happens in the future, I think it's something that, the industry is going to put the appropriate safeguards in place to ensure that those trade safely, right? So I think, certainly that demand, it's an interesting data point you showed there. As far as hourly expirations on major indices and ETFs, I mean, that's difficult to say. I'm not aware of any immediate move towards that. I think there's, but again, I mean, people have shown an interest for that shorter duration on the dailies, and it's something that we obviously keep an eye on.
Oh, thanks for that response. And here we have another great piece of data from Cboe talking about average daily option premium for the top index products. And SPX had the highest daily options volume among all index options products. Is SPX, Vince, is it only for institutional traders? Is it just too expensive for retail traders? What are some of the low cost strategies in terms of margin in use?
Yeah, I mean, I think there's, certainly I would not say it depends on the strategies you trade, right? I don't think many retail traders are selling naked at the money calls in SPX, right? Or puts. That's not something you're going to see to a large extent from retail. What you do see in terms of lower cost strategies, I mentioned the spreads before, right? So if you do a $5 call spread or a $10 call spread, you're defining your risk, right? So if you sell a $5 call spread for $2, the most you could lose is $3, right? So if you buy one for $2, the most you could win is $3, right? But those obviously are strategies that don't take nearly as much capital as selling outright or selling wide spreads or things like that. But I mean, certainly, we see retail volume in SPX and any index options in general. So certainly I would not say it's too big. I would just say what you want to make sure of is you understand the risk that you're putting on in any strategy. And obviously you want to gravitate towards those strategies that which are lower risk and don't require you to put up as much capital.
Oh, thank you. And the other thing that we've noticed is, an increase in active trading is spotlights cost consciousness, and 92% of options traders can consider fees either somewhat or very important to them, and that's something to be cognizant of. And for index options like SPX, more liquidity or tighter spreads was the top response for using them. Vince, do you have any more thoughts on transaction costs with liquid products like SPX?
Yeah, so just want to make sure I understand so 92 consider fees. Yeah, I mean, I think certainly, I mean, fees are going to be the cost to put on a trade is going to be a big input into what you decide to trade. I'd say obviously SPX is well known for having liquid markets. I mean, you got to keep in mind it's 10 times the size of SPY. So when you notionally adjust the spread, it's actually a very, very tight spread. So fully understood. I mean, that's where the products we see the most volume in are typically the ones where the markets are tighter, right? In those tighter markets, we get more volume. So it just becomes a cycle. So we as an exchange, that's sort of our role, is to put the conditions in to make the markets as tight and as safe as possible. And with some products, we obviously have great success in keeping them tight. But it's something where we'll have incentive programs for market makers to quote tightly early on when we're seeding interest in a product, and then after volume gets there, then after a while, then the product just sort of feeds on itself. Yeah, I mean, I fully agree that tight spreads is one of the most important things when you're talking about product selection.
Thanks for answering that question. And the last question we asked our users in the survey, how comfortable are they with options? And what we found was there was a lack of education holding investors back from trading them. 77% of non-options trader cited a lack of knowledge about options as a reason that prevented them from trading. And this is well ahead of the second most perceived risk, at 25%. And this is something we're working with Cboe on, is really making sure people are comfortable and getting educated from a beginner to intermediate to advanced level on topics surrounding just what options are, what's a call, what's a put, moving on to spread strategies, and then getting into some more advanced topics around volatility and implied volatility and actual volatility and volatility trading. Non-options traders are also interested in learning the basics, and that's really this beginner. Buying calls and buying puts are the two strategies non-options traders they want to learn the most about those strategies, and as Vince noted, they're the more simplistic strategies to start with, and they become the building blocks. A call or a put is the building blocks into many of these more complex spread strategies. They're also getting familiar with options products, and it can be important, right? You need time to get familiar. 81% of options traders are either not familiar or only somewhat familiar with index options. And Vince told us a little bit about index options earlier. And so, continue to watch these types of videos. We have a webinar with Cboe on just index options, and it's just as long as this webinar, and you can get a much more in-depth view of what index options are, what the benefits are. 57% of investors that do not trade options at all are either extremely or very interested in learning about them. So there is that interest, and that's something that we're working really hard here at Moomoo to make sure if you are interested in options, we want to give you that education to learn about how to trade them. And here we have another slide from Cboe. Index options investors trade spreads more often than non-index traders. And so, just summing up what we've learned today, options trading is really more popular than ever, and many traders are gravitating towards the basics in the past few years, and they're just starting out. And many are looking to expand into new strategies and products. A lot of people are active. They're trading on a daily or weekly basis, and they're looking for the best possible information and fee structures to really level up their trading experience. Options education continues to be super important, and Moomoo is working really hard to provide the knowledge and the comfort levels that investors need to succeed in options trading. Just have a few disclosures I need to run through here at the very end of our slides. And Vince, before we leave, I do have one question from the audience, and they want to know what the trend is in overnight trading, and which types of volumes did you see on election night?
Yeah, so that's a good question. I was actually just pulling that up earlier today. So trends for the last few years in overnight trading have really picked up. So in SPX, where options, where we do have global trading hours, it's basically open 21 hours, 5 days a week. It's gone in the past handful of years from about 1% of our average volume per day to about 2.5 to 3 on a typical day. Just in terms of last week, obviously with the election, we had a peak. So typically we have, we'll often have around 80,000 contracts a day traded in SPX overnight. Last week it peaked at 227,000 contracts. And then we had a lot of VIX contracts trade as well on election night, like 58,000 or so, which is an outlier. So we tend to see it a lot around big geopolitical events. We do see those spikes, but even day to day, you're still talking a few percent, 2 to 3% of average volume in the SPX is coming overnight.
That's great. Well, I want to thank you so much, Vince, for being on the webinar with us. We really appreciate Cboe's help with all the data that went into this really great survey. And again, the survey is available in our newsroom. And I want to thank everyone for tuning in. Make sure to check out the special offers on the website if you're not already a Moomoo user. We're going to be back tomorrow starting at 10 a.m. For 3 new webinars. Next Gen Trading, what's new on the Moomoo app with Moomoo Financial President Nate Palmer. A second one, helping women reach their financial goals. We have 3 wonderful financial experts on that webinar. And then finally, how will the election results affect your portfolio? And that will be, I will be sitting in a different seat. I will no longer be the moderator. I will be the guest. And so, that's yours truly breaking down what's happened in the markets since the election. Until then, happy trading to all of you.
Worried a stock's price will go down right after you buy it? With Moomoo, you can check out the most updated short sale analysis before you trade. Find out how much a stock is being shorted and its short sale trend. Get a clearer understanding of the market and trade with greater confidence. Short sale analysis is free and exclusive on Moomoo. Download Moomoo now.
Too much research, too little time? What if you move smart? Invest smarter with Moomoo. Small gains, big efforts. What if you move smart? Invest smarter with Moomoo.
Everyone around me is talking about investing. Do you invest too?
Moomoo.
There's so much research to do, but so little time.
Moomoo.
But how do I actually start?
Download Moomoo.
Investing made easier. Download Moomoo now.
Moomoo has partnered with derivatives world leader Cboe, bringing you an options experience like never before. 5 major index options are now available to trade on Moomoo. Enjoy competitive pricing with zero commission, as well as zero contract fees for stock options. Inform your strategies with Moomoo's suite of free options features, including as many as 13 option strategies for you to choose, with their theoretical profit and loss analysis quickly revealed, as well as in-depth options chain, among many others. Experience pro-level tools by downloading Moomoo now.
Hello, Japan.
家主義ムームー証券
Hindsight sucks. It's all about foresight. When it comes to trading, you gotta get your calls right. Moomoo's the platform with AI intelligence, serving up insights based on customized relevance. Globally backed around the clock support. Pro-level features at a cost of naught. So let me ask you some questions that may seem curly. Would you rather work from dawn or retire early? Dream of getting on the ladder or buy a dream home, dance to someone else's tune? Or Moomoo your own?
Worried a stock's price will go down right after you buy it? With Moomoo, you can check out the most updated short sale analysis before you trade. Find out how much a stock is being shorted and its short sale trend. Get a clearer understanding of the market and trade with greater confidence. Short sale analysis is free and exclusive on Moomoo. Download Moomoo now.
Too much research, too little time? What if you move smart? Invest smarter with Moomoo. Small gains, big efforts. What if you move smart? Invest smarter with Moomoo.
Everyone around me is talking about investing. Do you invest too?
Moomoo.
There's so much research to do, but so little time.
Moomoo.
But how do I actually start?
Download Moomoo.
Investing made easier. Download Moomoo now.
Moomoo has partnered with derivatives world leader Cboe, bringing you an options experience like never before. 5 major index options are now available to trade on Moomoo. Enjoy competitive pricing with zero commission, as well as zero contract fees for stock options. Inform your strategies with Moomoo's suite of free options features, including as many as 13 option strategies for you to choose, with their theoretical profit and loss analysis quickly revealed, as well as in-depth options chain, among many others. Experience pro-level tools by downloading Moomoo now.
Hello, Japan.
家主義ムームー証券
Hindsight sucks. It's all about foresight. When it comes to trading, you gotta get your calls right. Moomoo's the platform with AI intelligence, serving up insights based on customized relevance. Globally backed around the clock support. Pro-level features at a cost of naught. So let me ask you some questions that may seem curly. Would you rather work from dawn or retire early? Dream of getting on the ladder or buy a dream home dance to someone else's tune? Or Moomoo your own?